Welcome to CEO Money. I'm Michael Yorba, your host, with Mervyn Price, co-host, and we've got Tommy Habib sitting in with us on the show. Our guest this segment is James West, CEO, Midas Letter Financial Group Limited. James, welcome to the show.
Thank you for having me.
All right, my pleasure. James, let me back up a little bit. You've got the Midas Letter and your CEO podcast in Canada for Canadian public companies, but I'm on your website and you have all kinds of things going on there. Let me tell our audience about you, about your Midas Letter and what you do for the world.
Okay, sure. The Midas Letter has been a private advisory service for individual investors. I've got about 7,500 institutional and high net worth family office subscribers. And the newsletter got started basically covering the mining sector. But during the last 4 to 5 years where the mining sector really hasn't delivered a very positive experience for a lot of investors, I branched out into other sectors, and specifically the cannabis sector, which is very interesting because Canada has found itself at the forefront of the global movement to legalize cannabis. And so I've evolved from becoming a private financial or subscriber-driven financial newsletter to becoming just a free newsletter in which I disclose the companies that I've made investments in and disclose the reasons for doing so and provide sort of an educational track to investors who want to see what the process is that I deploy to arrive at these decisions.
Where can people find your newsletter? Because it's more than just on your website.
Sure. Well, MidasLetter.com is where it all begins, and visitors can just sign up for the free newsletter, and that's really all there is. And we have the ability from that point to enter different tracks specific to areas that are currently of extreme interest, like lithium, financial technologies, cannabis, gold, silver, and I'll always cover those areas from which I started.
What's the latest in mining security, technology, and future energy? I want to cover those, and Merv wants to jump in and cover some of the other topics you talk about.
Sure. Well, okay. So the mining space, and again, my focus is covering emerging companies. So I seek to cover and bring exposure to the entrepreneurial class because the exposure for investors to returns can be 100%, can be 1,000% in the best case scenarios. And so that's where you get the higher lift. So you can absorb a lot of losses if only 1 out of 10 companies delivers 1,000% return and you lose, 10 to 15 to 20% before you sell losers. So that's why I focus on these areas. Now, specific to the mining market, we saw 5 years where commodity prices essentially caused all of the capital markets investment in mining to dry up, and a lot of companies just disappeared from the map. And then we saw a resurgence in junior mining led by the lithium sector as a result of Tesla's, final launch of the Gigafactory and the advancement of Tesla, et cetera. And so that lithium market catalyzed a rebound in the market that began towards the end of 2016, which is now appears like nothing more than a dead cat bounce because the juniors have come off again, the volume and liquidity in the space is drying up, and so in that space things have gotten awfully quiet. On the fintech side, things are heating up. They're going the other way because the cryptocurrencies, Bitcoin, Ethereum rather, and the other ones, they're starting to sort of get traction in the mainstream. More banks and more online vendors are accepting them as a form of payment. Investors have had great experiences with some of the companies. And so fintech is an area that's attracting a lot of investor interest.
I know that's where Merv wanted to drill down on is the fintech and the cryptocurrencies. Merv, do you have any questions?
Well, actually, looking at your website, David, you have what I would consider to be a healthy interest in cannabis. Tell me about your following of that market.
Well, sure. So cannabis as a sector is fascinating because the analogy in the history of investing for humanity would be the deprohibition of alcohol in the 20s, in the late 20s. So that catalyzed the onset of a market that created so many sort of alcoholic beverage unicorns, from beer companies to wine companies to spirits companies, that if that is the sort of pattern that is about to be repeated in the cannabis sector, then this is a once-in-a-lifetime opportunity for investors to jump in and capture a piece of generational wealth, which those opportunities just don't come along. So when you see that extreme exposure to cannabis on my site, it's because, in my view, this is one of those opportunities that makes everything that's going on in lithium and fintech and mining and other industries sort of pale in comparison when you think of the potential scope of what the investor experience is going to be.
I see you follow central banks as well. Tell us about that. That's a very interesting topic.
Well, central banks used to be the biggest cause of indigestion and sleepless nights for me, because the general health of the financial markets and the liquidity in the marketplace is generally derived from what central banks do and what we perceive them as going to do, and trying to predict what they're going to do. And so I spent a number of years, coincident with my focus in the mining space, trying to, understand central banks and central bankers and their economists and their thinking and the interests that they represent and the interests that they conflict with, in an effort to try to, align my investment approach with what they were going to do, because I perceived that if you could successfully anticipate what central banks are going to do, you should have a better performance in your portfolio. However, I have become extremely cynical towards central banks, and it mostly has to do with credibility issues, in that central bankers in the G20 typically do not do what they say they're going to do. They do not act in a rational manner, and they are essentially unpredictable. So I've suddenly been able to sleep very well and lost all indigestion now that I've stopped really paying too much attention to what central banks are going to do, because it's like trying to grab vapor with two hands. You're just never going to do anything.
Just do an astro chart on them. You'll get a better handle on it. Let me drill down on this cryptocurrencies. I've been getting people asking me if we would cover this more in depthly. How many cryptocurrencies that you know of are out there? How do they work? And is this something that is going to evolve on a global scale for all monetary systems? I mean, I really do have some honest questions about this part.
You bet. And I, again, have a healthy dose of cynicism and skepticism when it comes to cryptocurrencies. How many are there? I know of it, I would say, in the range of about a dozen that strike me as having some momentum and some buy-in from a large audience. The essence of a cryptocurrency is that they are transparent and unmanipulatable because of the blockchain upon which they base, which basically is the ledger of every single transaction which travels with each Bitcoin, or as an example, the best known one. And essentially the entire ledger of the entire currency is available for anyone to see, while preserving the anonymity of the transactions party and counterparty.
Yeah, but the cryptocurrency fluctuations, I mean, they make pork bellies look like a 30-year T-bond. And you know what I mean? This is...
I agree. And to me, the biggest risk is, okay, you're telling me that these things are better than gold as a base currency. It's better than paper money because it's impossible to print just ad infinitum. However, the risk to me is, if you're telling me that this entire currency is based on computer code that is at essence so sophisticated and complex that there are a handful of people in the world who understand it from end to end,
right,
then I propose that currency and that software is ultimately subject to the most ridiculous forms of abuse, well in excess of what central banks currently do with their currencies. And I don't believe it's any safer. And I think the fluctuations in the prices every time there's a breakdown, the Mt. Gox failure was probably the most well known. The price crashed. Investors who were up 2,000 and 3,000% suddenly found themselves looking at losses. And that volatility to me is, on the one hand, yeah, that's okay. That's indicative of a maturing technology. But on the other hand, it's also highly indicative of an unstable technological platform.
I just like to get my hands on somebody who says, yes, I invented that crypto technology. Let's see a human stand up and say that was mine. It's not happening.
Yeah.
Jim, listen, there's so much more that we can talk about. I'm glad we had our maiden voyage with you on the conversation of the Midas Letter, the topics that you have. I want to invite you back in the future. In the meantime, we've got to go. But before we do, please let everybody know how to reach you and so they can find some of these articles we're talking about.
Sure. Well, you can just search Midas Letter. It's probably, you'll be amazed how many pages come up about it on Google, but also just visit MidasLetter.com, and the archive of everything I've ever written is there, and it's searchable, and it's easy to find, and I hope it loads quickly, and I really appreciate the opportunity to be on your show.
Thanks so much, James.
Thank you. Bye for now.
You're welcome. All right, James West, CEO, Midas Letter, MidasLetter.com. On the other side of this break, when we come back, Lori Ashmore Peters, Peters Law Firm, PC. Merv?
Yep.
Say thanks.
Thank you very much, Michael. And I'm looking forward to seeing Laurie because I know her.
We'll be right back on the other side of this break. Mervyn Price, Michael Yorba, CEO Money.